Thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We discuss on a daily basis what's impacting mortgage rates, and sometimes it could come from the economic calendar, it could come from headline news or geopolitical. Sometimes even it can get a little more confusing in the markets when investors have a change of sentiment, and good news is now bad news, and vice versa. So we try to give you kind of an explanation of what's going on, what's in the minds of investors, and that way you can better prepare yourself if you're looking to refinance or buy a property and to try to lock in a rate or hopefully maybe float a little bit longer. For those of you guys that are just in the industry, hopefully this will give you information so that way it gives you more information on what's going on with the markets, and that way you can follow along. A little bit about myself is I am a loan officer. I do work with a national lender. We do loans in all 50 states. So if you guys got looking to refinance or purchase, we'd love to hear from you guys. Give us a try. If But more than that, we like to be a resource for you guys. If you guys got questions about anything, we're here to answer anything you may pose. So please feel free to reach out. We're here to help you. Without further ado, we'll just jump right into the economic report today in our report. And today is a light one. We have factory orders for the month of March. So February was revised actually. It was actually down half a point, but it went up 1.1. So instead of being a negative, it actually rose 0.1%. Now, the forecast was come for 1.1% in the month of March, and it exceeded that, basically doubled it at 2.2%. So, good news right there on that avenue. But today also we got the first day of the FOMC, which is the two-day meeting, and the Fed will be gathering and give their announcement tomorrow. So that will be the big day. So that basically has the markets, both mortgage-backed securities as well as stocks, preparing for the outcome. Now, we do have, for the most part, an idea what's going to happen tomorrow. We do know, we pretty much are certain that they'll be raising it by half a point. There obviously will be start talking about the probably when they'll be implementing the balance sheet reduction. Now, what they'll be looking for is if the Fed will continue, if they'll continue at the half a point increment over the next four meetings, or there's also some speculation that they could raise it even further in like June and July's meeting at three quarters of a point. So they have talked about front loading it, but exactly how that action or that plan will be implemented, we're still not clear on. And then also the balance sheet reduction. How aggressive are they going to be in trying to reduce the balance sheet? So that's another item that they'll be watching very closely for. So let's take a look at rates today. We did have some improvement yesterday. At one point, we were down like 36 basis points, I think, yesterday. Ended up closing down to 17 for the day. Now today, we're up 13 basis points, so we're pretty close to where we were where we started the day yesterday. But so we do have some improvement in the mortgage rates today compared to yesterday's close. So we're pretty close to where we left off on Friday for the most part, if that makes sense, since yesterday started pretty much close to where we left off. Uh, let's see the volatility today. We had some movements here. So as you can see here, shortly after the opening bell, we did shoot up a bit, and then for the most part sideways, but have had a few spikes here, small spikes here, but for the most part kind of going in the sideways pattern here since shortly after the opening bell this morning here. Yields, that one's going to be interesting because 10-year yields yesterday it did touch off the 3% mark. It did subside. Right now we're hanging down just under 2.95 right now. We were down earlier, down to about 2.92, but looks like it's come up a little bit, adding a little more pressure to mortgage-backed securities. Because at one point we were actually up about 17 basis, about 17 basis points. We were actually up, but we did pull back a little bit, and as this one kind of rose, the 10-year Treasury kind of increased a little bit here. Now, investors are kind of gearing up again. They are gearing up for the FOMC. That's going to be the big one today. Tomorrow, we do got jobs reports this week as well. So tomorrow we'll have the ADP, and we'll have the initial job list comes on Thursday, and Friday we will have the Bureau of Labor Statistics. So we'll get the non-farm payrolls as well as unemployment data there. So those things will have some impact, but again, tomorrow probably our biggest impact of this week due to trying to get some clarity of the path of what the Fed's thinking or where they're looking to go. So we do still got some corporate earnings reports, which have some uh, ebbs and flows with the stocks, but we're not getting as much of that impacted here on the mortgage-backed securities or mortgage rates here. So, last but not least, let's touch on what's the average rate for a conforming loan limit. These do have points built into it. So we'll start off with the 30-year fix, which is at 5.55 now. It did jump up from yesterday. And then the 15-year is at 4.89. So as you can see, rates are still climbing. Now, a lot of people are worried about the rate hikes, which, the rate increases. Now, a lot of experts are out there saying that they think we've seen the biggest peak, so it may go up a little bit more, but they don't think it's going to spike that much more. As we've seen, approximately about 2% just from January on in these like 4 months. We saw, approximately 2%. Now, most likely may not see another 2% the remainder of the year, but it may go up within the percent. So I think that's what they're kind of talking about. Just kind of give you a heads up as to speculation of what's going on with rates today. Now, again, if you guys get questions, please reach out. We are here. We're concluding here. If you guys like these videos, please help us out. We greatly appreciate folks. If you could smash that like button and share. And also, thank you very much. We do appreciate you guys. You guys have a great rest of your day. We look forward to see you guys in tomorrow's video. Have a great rest of your day. Bye-bye.